Hey everyone, and welcome back to another video. Today is going to be a little bit different. We're going to be in my computer and I'm going to be going through and explaining and talking about the new version of the spreadsheet that was just released a couple of days ago. And I'm going to give you an example of how to enter in all of the data because I think that's really helpful. It's not always intuitive where you should get some of the data pieces from and how different parts of the spreadsheet work. So I'm going to go through and explain all of that with an example in today's video. If you have any questions after this about things that maybe I didn't explain well enough or things that I didn't cover, then go ahead and leave them down in the comment section below and I'll be answering questions after the video goes live. So I'll be able to answer any questions that you have that I may not have answered in this video. But without further ado, let's jump into it and let's start by talking about how you can download this spreadsheet to start off with. So in the description below, there will be a link to download the free spreadsheets. Now, all of the previous spreadsheets are also available still because the new spreadsheet is in what I'm calling beta testing because it's fairly new and I'm not sure. There may still be some errors in the spreadsheet. I've done quite a lot of testing, but there can still be errors that prop up. I'm just a one-man team here, so bear with me if there is errors in it. So I have left the other spreadsheet available there as well in case there are errors so that you can go back and use the other one. But essentially, you just head over to www.hamishhodder.com/spreadsheet. It'll bring you to this page, enter in your name and your email address, and that will bring you over to this page where you can download all of the spreadsheets. So up at the top, we've got all of the previous versions, the 10-year spreadsheets for 2020 and 2019, and I'll explain what that means in just a second, and then the 5-year spreadsheet. And then in terms of the new spreadsheet, you can see they're down here, and we've got two versions, the 2019 and the 2020. And the difference, essentially, you just click this link to download it. And essentially the difference when it comes to 2019 versus 2020 is essentially just which annual reports is the latest that's available for the particular company that you're looking at. So some companies have already released their 2019 annual report, and as a result, you'll want to use the 2020 spreadsheet. And for companies that have not yet released their 2019 annual report, you'll want to go ahead and use the 2019 version of the spreadsheet so that you can use that and enter in all of the numbers. But essentially, once you click and open the spreadsheet, you're not going to be able to edit this version of the spreadsheet. All right. So if you go and try and edit this, it's going to give you up a thing that says that you need to ask for permission. You do not need to ask for permission. I'm not going to give you permission to edit this sheet. It's a public sheet that is always going to be blank. Okay, so don't send me an email saying you're requesting access. This is how you get access. You simply log into your Google Drive account or your Google account. If you have a YouTube account, then you probably have a Google account as well. They're probably the same thing. You head over here to File, and you'll notice here there's Make a Copy. So click Make a Copy, and then you can call it whatever you want, and you can save it wherever you want on your Google Drive, and you will be able to edit the copy that you create. So I'm just going to call this test spreadsheet for the purpose of this video. And I'm just going to save it wherever. I don't really care. So once you click OK, it's actually going to open up the copy spreadsheet that you just created in a new tab, and you will be able to edit this version. So then you can go ahead and close the original that you just opened. So here we go. We've got this test spreadsheet, and we're going to be able to edit this spreadsheet. So the first difference that you'll probably notice is that up in the top left, we've got a cell here that allows you to enter in a ticker symbol. So previously, you would have to pull a lot of this data and go out and find it yourself, pull it from websites yourself. But I've now linked it up to Google Finance, so you can just get it by putting in the ticker symbol. So this works for Australian and US businesses, and I'm sure it works for many other markets, but I haven't tested it with all of the markets. The company that we're going to be using as a test example is going to be Thor Industries, so their ticker symbol is THO. So you enter that in. And you'll notice that it will pull the share price data and the PE ratio. Well, it won't pull the PE ratio yet because we haven't entered in the earnings per share, but it will pull the share price numbers for you there. And that's going to be really helpful for calculating the PE ratios and the average PE ratios automatically once we've entered in the earnings per share data. A couple of people were asking me what June 30th means. This is essentially the price that the stock was at on the 30th of June on any given year. So let's say 2015. So on the 30th of June 2015, the stock price for Thor Industries was at $56.12. $0.28. So that's what that means. But essentially, again, as always, the white cells are the ones that you can edit. So anything that's in gray, if you try and edit it, it's going to give you a warning. That basically means that if you edit any of the gray cells, you could edit a cell that has formulas in it, and it could mess up the spreadsheet. So just keep that in mind. You can edit the gray cells if you want. If you want to manually change some of these things, go ahead, feel free to. And I encourage it if you know how to use Excel, but just be aware that if you do edit those things, it may mess up some of the formulas in some of the other parts of the spreadsheet. But essentially, you can see here that we need to pull the data from 2010 all the way up to 2019 in terms of sales, earnings per share, equity, operating cash flow, and then maintenance capital expenditure. And then we also need a couple in terms of current assets, current liabilities, and total liabilities. And the best place that you're going to be able to get all of this data from is a website called QuickFS. Now, recently, QuickFS added in Australia and Canadian stocks on those two stock exchanges. There previously was not any data on Australian companies. I'm happy to say that there is now, which means it's going to make your life a lot easier if you're analyzing Australian businesses. But essentially, the company we're looking at is an American company anyway. So you just type in the ticker symbol. You do have to create an account for this website, but it's completely free. So there's no reason not to. Once this is pulled up, we can head over to the income statement and we can find revenue is the top line. That's the same as sales. So these are the numbers that we're going to need, 2010 all the way up to, well, we need 2019, but I'm going to grab that from the latest annual report since it's not on QuickFS yet. Thor Industries released their results very recently. So I'm going to head over to the spreadsheet and just in here, I'm going to enter in the sales numbers. And then I'm going to grab the earnings per share numbers from 2010 onward. And I'm going to cut the video and put these in so that I don't waste too much of your time. But essentially, you can get the sales and earnings per share from the income statement. From the balance sheet, you're going to be able to get the equity number, shareholders' equity. From the cash flow statement, you're going to be able to get cash from operations. And then you're also going to be able to get maintenance capital expenditure. You're going to be able to get capital expenditure from the cash flow statement. It's property, plant, and equipment right here. But maintenance capital expenditure is a number that is a portion of total capital expenditure. So if you want to learn more about that, I don't have time to explain it in this video, but I believe I've spoken about maintenance capex in other videos in the past. Check out some of my other valuation videos. That's probably where you'll find that information. But essentially, maintenance capital expenditure is a number that you're going to need to come up with that is going to be a portion of the total property, plant, and equipment. And if you're lazy, you can just put the total property, plant, and equipment number in there, and that will be completely fine. So I've gone ahead and entered in all of those numbers that I got from QuickFS, and I've also entered in these three, which I didn't explain actually, they were on the balance sheet. So that's current assets, current liabilities, and total liabilities. All of those are also on all of those are on the balance sheet. If the company that you're looking at doesn't have numbers in QuickFS or you can't find the numbers, then the best place to go is just head over to the investor relations page of any company's website. Every public company has an investor relations page, and you'll be able to find the annual reports. And just by going through the annual reports, you'll be able to find their equity numbers and their sales numbers and that sort of thing. But usually that takes a lot longer, so it's better if you can find the numbers on something like QuickFS, and it'll save you a lot of time. But essentially, what this does immediately is we've calculated some current ratios, some debt to equity ratios, and these are going to be used to assess management's ability to manage debt to a lower level. Also, the price to earnings ratios have been calculated for us because now we've entered in the earnings per share. So we can see the price to earnings ratio in any given year, and then we've got the 10-year low, the 10-year high, and the average, which is going to be helpful in working out, relatively speaking, where the company is compared to where the price of the company is compared to their earnings as they have been in the past. Now, return on invested capital will calculate immediately after you've completed this page, but it is not accurate until we've head over to the next page and we've entered in a few more numbers. So if we head over to return on invested capital, you can see that cash flow for owners is entered in for us, equity and capital, all of that has been pulled from the previous sheet, but what we do need to enter in is long-term debt. So again, you're going to want to head over to QuickFS, head over to the balance sheet, and you can see long-term debt is right here. Thor Industries doesn't have much long-term debt, so they only have it in 2 years and in 2019, which isn't on here. But you want to enter in those numbers into this part of the spreadsheet. So once you've done that, the return on invested capital will calculate for you. And you can see it calculates it for each year, gives you a nice little graph as well. And then if you head back over to the data input tab, down here we have calculations for the 1 year return on invested capital and the 10-year average. And the reason why we look at those is just very quickly, we're generally looking for both of these to be above 10%, and we're looking for their return on invested capital to be growing over time. So we want the 1 year to be higher than the 10-year in most cases. The next tab on the spreadsheet is the growth tab. This is the same as the previous spreadsheet. It's exactly the same, in fact, except for the cash flow for owners section. This has been changed from free cash flow, but you can still use this as free cash flow. As I said earlier, if you just take operating cash flow and use total CapEx in the maintenance CapEx section, then you're going to be able to calculate free cash flow. But I've just changed the label to free cash flow for owners. But that's going to calculate all of your growth numbers. There's nothing on this page you need to change or edit. It's all done automatically for you. And that's going to show you the growth over time. The boxes will light up green if they're above 10%. If they're below 0, they'll be red. I believe they'll be yellow if they're above 5%, and if they're below 5%, they'll be orange. So I think that is the distinction there, because we're looking for all of these numbers to be consistently above 10%. And then the final part of the spreadsheet is the discounted cash flow calculator. So this is the part where we're calculating the value of the business. And ultimately, when we're calculating the value of a business, what I mean is we're calculating how much cash we can get out of it. So in the year 0 tab here, this is where you're going to be wanting to enter in the latest cash flow for owners figure. So in 2019, cash flow for owners for Thor Industries was 451.2 million. So if we come over here, we can enter in 451 million, and we can drag that down and use it for all of the models. And there's 5 different models you can use here. You don't have to use all of them, but generally I like to find a range at which intrinsic value might sit. So I'll pick a range of values, and that way I get a range for intrinsic value down here. The risk-free rate you enter here is you essentially just go and find the 10-year treasury yield, and that's basically going to mean that if you don't invest in this company, then you know that you can put your money into a 10-year bond for 10 years, obviously, and generate that particular return, whatever return the bond is offering. So that's why you want to enter in that there when we're calculating intrinsic value. Again, if you want to learn more about this stuff, I'm not going to explain it in this video. So go check out some of my other videos on intrinsic value and that sort of thing. And then the required rate of return is the return that you're aiming to achieve. So generally, I'm trying to make 15%, but then I also sometimes want that 50% margin of safety, because I'm not sure if my calculations are accurate. So with the 50% margin of safety, I'll sometimes use a 22% return. And then over here, we'll get a calculation of intrinsic value for the whole business, remember, and these are in millions. So we've got 7 billion all the way up to just under 13 billion using this very quick calculation that I just did that is based on absolutely nothing. Then we have the buy price, and this buy price is derived from the cash flows that the business produces and from the return you're trying to achieve. So if you want to achieve a 12% return instead of 22%, then you'll notice that the buy price goes up. The price that you can pay for the company goes up if the return you're demanding goes down. So the higher return that you demand, the lower the price has to be relative to those cash flows. And then also we've got a new section of the spreadsheet which calculates the per share buy price for you. So this pulls the data from Google Finance of how many shares a company has. It divides the total buy price of the business for the whole company by the number of shares, and then gives you the per share value. So in this quick example that has no actual meaning in real life, the buy price ranges from $70 per share all the way up to $120 per share. So essentially, to sort of go back over it and summarize this, this spreadsheet will allow you to do a number of things. It'll allow you to firstly here calculate, sort of have a look at how much debt a company has, and generally using the strategy that I teach on the channel and teach for my members, we're looking for businesses that have very low levels of debt. So that helps you to assess that. The return on invested capital spreadsheet helps us to assess the ability of management to invest within the business, because we want to be investing investing in businesses where management's always very consistently generating a high return on capital. Thor Industries, for example, here you can see consistently generates a return of above 10% on what they've invested within the business, which is pretty impressive for a company in the RV industry. It's an industry that is very capital intensive. And then in the growth tab, we can have a look at, for the most part, we're looking at this to assess whether or not a company has a competitive advantage. So companies that are consistently growing their revenues, growing their earnings, growing their equity, growing their cash flows, they generally have some kind of advantage over the businesses in their industry. So we use this to assess that. And then the final sheet, of course, is where we're actually trying to estimate the cash flows of these businesses. So first we need to find a great business and use a number of measures to assess that. And then once we've found a great business, we need to estimate how much cash we can get out of it, and therefore use this spreadsheet to work out what price we're willing to start investing in a company. But I think I've just about covered everything. Remember, there's a link in the description if you want to download it. It's completely free, by the way. I don't know if I mentioned that. It's free. You don't have to pay anything. And yeah, as I said, if you have any questions that I may not have covered, some problems or parts of the spreadsheet that I might not have covered in this, then go ahead and leave it down in the comment section below, and I'll be answering your questions after this video goes live. But I think that's probably just about it. So thanks everyone for watching, and I look forward to producing some more content for you guys in the future. I'll see you later, guys.